Hello, this is Sonny Adiagbo. There's something I want to show you on the screen. What we have on the screen is Gbpcad, the 1 hour chart of Gbpcad. And what I want to point out to us is the fact that Elliott wave patterns and chart patterns have similarities. Okay, they have a junction where they both have the same interpretation, okay, where they decide the movement of a particular market. Okay, according to chart patterns, we have a continuation and a reversal patterns, but we'll be looking at the continuation patterns. Okay, so from this from what we have here, price moved down from here to here, and then after that it went into a congestion. And what do we see? What happened here? It broke out of it and moved well. Price moved again this way. Okay, we also have a kind of congestion here, a mini congestion. And then price continued moving up again. Another mini congestion. It moved again. Another mini congestion. It moved. Now it's now in a long congestion here. Okay, and price has broken out of this congestion. So we are likely going to see a movement down that is of the same length, of the same size, with movement from here to here. So that's what chart pattern taught us, that when price is moving in a particular direction, let's say this way, it can go into a kind of consolidation like this. Okay, like something like this, move sideways. After some times, you see it breaking below to continue this move. And how do we know how this move is going to end, or how far it's going to go? We usually determine that by the size of this of the preceding trend. Okay, so that's what we determine this. Once price breaks this neckline here, and then we see it going down. Okay, but we have different we have names for the patterns, the continuation patterns in chart patterns methodology. Like the one we have here is a triangle. Okay, well, one we have here is a kind of channel part, which is called the what do they call it now, the flag pattern or the pennant. Okay, so the names are not that important. What is important is the patterns that formed. Okay, so a move from here, then we see this congestion here, movement again, we saw this congestion there, then movement down again. Now, how do we put Elliott wave into this? Because Elliott wave gives it a kind of it gives it a better structure, more definitions. It tells us how far this is going to move, and the position of this expected move in the general market framework. So let's look at how chart pattern defines all of it. This is a triangle. We also have triangle patterns in Elliott waves. We also have this kind of patterns in Elliott waves. So let's look at how this plays out in Elliott wave theory. So let me load my template, Gbpcad. Okay, so from here, let me say from here, this way here, we can see that price has been moving, okay, in what looked like a 5-wave structure. Wave 1, wave 2, this is the wave 3 here, and then the triangle we saw the other time was actually the 4th wave of this move. I will say price moving down in the 5th wave, and this 5th wave is going to be an extended wave, given the fact that the 3rd wave is almost as big as this. Even the 1st wave is almost as big as this. Okay, so this 5th wave is an extended one and is in the 4th wave. Okay, now the 4th wave here is a congestion, and price is expected to price has already broken out of it and is expected to come at least to this level around 1.8500. okay, which is a projected level of this move from here and of this move from here. So it's a confluence Fibonacci level where we expect the 5th wave to rest. So at this point now we'll be expecting a move up. So how do we think our advantage of this? And even besides that, let's look at this this pattern, which is called the pennant or the flag pattern in chart pattern. Let's see what kind of pattern it formed in Elliott wave. Okay, now look at this pattern. Now this is the pattern, this is the movement from the third wave here. We saw an A B C. Okay, there's an A B C here, A B C. This is a it looks like more like a flat pattern than a zigzag. Okay, this is 3 3 5. Okay, and we saw this triangle as the second leg, A B C D E, and we saw this one here like A B C, like a zigzag. So this is a complex corrective pattern. Okay, complex corrective pattern is a combination of 2 or 3 of the major corrections or corrective patterns that we have in Elliott wave. This is flat, this is triangle, and this is a zigzag pattern. And we saw price reacting or breaking below it. Okay, so how do we take advantage of that? Though a selling signal can be generated here down to this point, but if we look at it very well, you will see that it does not pose a good risk reward ratio. This is about 285 and this is about 281. So how do we take advantage of it, of this? There is a chance that price will come to this level. So the retracement of this particular move, let's say 1 2 3 4 5, is around there, 50% to 61.8%. We often see the second wave. Okay, so we've started the labeling of the fifth wave here. So if this is the first, we'll be expecting a correction around here. Okay, and besides that, we have this long trend line here. Oh, this long trend line here. Look at the trend line from here. Okay, so the trend line also made it clear to us that this level is a real magnetic zone that price can move to before it starts crushing as we expected. And apart from that, we extend this line and the triangle, we discover that they also intersect around this level here. So it makes this level to be a very strong level to watch out for. So what we're going to do here is to wait for a retracement here and see how price reacts there. Okay, we would love to have a zigzag pattern down to this place, especially when we go to the 5-minute chart. We will be able to see that clearly. So we want a zigzag pattern, okay, to take us here. So after that, we'll now be looking for a sell opportunity, okay, down to this level. So that will be a about 145 pips to risk to take about 400 pips. So that is a very good risk reward ratio. So the idea is winning minimum of 50% of our trades in this kind of risk reward ratio. So that is what will make us to win in the long run. So this is Somi Agdiagbo. So we'll be expecting price to come around there before we see if we can put a sell trade opportunity or a sell trade from here down to this place. Well, meanwhile, price may not get there, it may start coming down, but we want to wait for price to get here. Okay, we want to trade something of high risk reward ratio. So that is how we're able to put chart patterns and Elliott wave patterns together. Okay, they are harmonic in nature. When you look at chart patterns, Elliott wave patterns, and Fibonacci with candlesticks, they are very reliable. They can give us high probability trades with a high risk reward ratio, which is actually what we need to be successful. All right, thank you very much. This is Somi Agdiagbo once again. I thank you for watching this. Bye.